The following is a table that outlines how to record a transaction when using accrual-based accounting, depending on what has occurred. If the business receives cash, and the cash was earned, then the resulting entry in the books is a debit to a cash account and a credit to a revenue account. If cash is received, but it was not yet earned, then the entry in the books is a debit to a cash account and a credit to a deferral account, such as unearned revenue, which is a liability account. A deferral account is an account created to show that cash has happened, but the corresponding revenue or expense has not yet been earned or incurred. A deferral account is used whenever one of these situations occurs. Deferral accounts are either asset or liability accounts. So in our previous transaction, unearned revenue is a deferral account that is used. This is because cash was involved in the transaction, but revenue has not yet been earned. The unearned revenue deferral account is a liability account in this transaction. If revenue is earned, but the cash for that revenue has not yet been received, we know we must credit a revenue account, but what is the debit? You will debit an accrual account, such as accrued revenue. An accrual account is an account that shows that a revenue or an expense has been earned or incurred, but the cash expenditure or receipt has not yet happened. Whenever a transaction like this takes place, an accrual account will be used. An accrual account is either an asset or a liability account. Accrued revenue is an accrual account. This is because revenue has been earned, but cash has not yet been received. Accrued revenue is an asset account. What happens if cash has not yet been received and revenue is not earned? Well, nothing happens. No record is made. The same is also true when cash is not paid and no expense has been incurred. Obviously, if no cash is paid for no expense, then there's no transaction and no record made. If an expense is incurred and the cash expenditure also takes place, then you simply debit an expense account and credit a cash account. If an expense is incurred, but the corresponding cash expenditure has not yet happened, you debit an expense account and credit an accrued expense account, which is an accrual account, because cash has not yet been spent and an expense has been incurred. An accrued expense is a liability account. If cash is paid for an expense, but the expense has not actually been incurred yet, we know there will be a credit to cash, but what is the debit? You debit a deferral account, such as prepaid expense. Prepaid expense is a deferral account because cash has been spent, but the corresponding expense has not yet been incurred. This deferral account is an asset account. Let this matrix serve as a cheat sheet for understanding the correct type of entry to make when using the accrual basis of accounting. For more videos like this, visit AccountingWITT.com.